supposed to rain this weekend.
Maybe.
Yeah. Okay, I think we're live. Good morning, everybody. This is Billy Parrott, Billy in B-Town, Meridian Real Estate. It's Friday, so that means it's coffee chat time.
It's coffee chat
time. And I'm with one of my favorite lenders in Billings, Montana, Dede Stoner with Guild Mortgage.
Hello.
We are here to do our mortgage update.
Yeah.
Dun, dun, dun.
Exactly.
I feel like I need like music. Dun, dun, dun. Thank you again for doing this with me. I always enjoy talking to you. And it's always fun. People love to watch. So please, if you have questions as we're going on, put them in the chat box. We'll try to answer them all. If we don't know, then we'll figure it out.
We'll figure it out.
We will figure it out.
That's what we do. We figure things
out. All right. So first question for you. What's the current outlook on mortgage rates and how can borrowers prepare for any upcoming changes?
So this is a really fun question because last year there were lots of different opinions and the opinions were wrong. Imagine.
As always. So we're here to give you the truth.
Exactly. So the end of the year turned out very differently than what they said it was going to turn out. And they changed their story or their predictions probably about fall. And where they thought last year we were supposed to end up in the high fives, about September is when they said, no, you know what? I think we're probably going to hit 8% this year. And guess what? We hit 8% last year.
Sure did.
And so at the end of the year, they got it right. But the rest of the year, it was off. And it's not they don't know what they're doing. It's because we're in a very weird economic time they don't know how to manage, how they made their predictions and whatnot. This is just my opinion. The old ways of doing things don't fit what this weird economic situation is.
Right.
And so I think they're having to figure out new ways to try and make new predictions.
Yeah.
Right? Okay, so initially at the end of last year, they thought that the end of this year, we might end up in the low sixes, maybe high fives. And that's really exciting, right? Now they're saying that we may end up in the high fours.
Oh.
But here's the tricky thing. So at the beginning of the year, or excuse me, end of year, when the federal government was talking about, we feel like inflation is just about where it's at. We're probably going to lower rates next year. I think they said 4 to 6 times. Well, now the market just went crazy and we saw interest rates. Well, we have actually seen them come back up. The national average is close to 7% on a conventional loan now. Because the rates have come back up. Because what happens is, and this happens every single time, the market overreacts. They take this one piece of information and they act like this is what's going to happen for the future.
Right.
And whether it's a piece of good information or it's a piece of bad information, they're like, oh, this happened today, so that means it's going to happen for the rest of our life. And they do that every single report that comes out.
And now who is they? Who are the they people?
The they people. I think it's
who are these people?
And I don't really have a good way to answer that because I don't understand that myself.
Yeah.
I feel like it's basically like when you go to Vegas or you gamble on something. That's what I feel like. People are gambling
with our lives.
Exactly. They're gambling with our lives. They're taking a guess. They're taking this information. And they're like, oh, well, I have this information, so I'm going to bet that this happens. And so that's why we see the up and down in the market is because they are betting on, well, because of this is going to happen. Or because of this is going to happen. Right. And so that's what drives things. It's a very simplistic way. It's much more complicated than that. And it's not my area of expertise, but that's my simplistic interpretation of that. So the outlook is rates are going to go down. Now they're saying that the federal government may lower the federal funds rate maybe 2 to 4 times this year versus they were thinking 4 to 6 before. Okay. So as the year is progressing and the progress or inflation rate that they are hoping for, other people were expecting it to happen faster, and the government's like, hold off. We don't have enough information to make this decision yet. We're still waiting to see what's going to happen.
Right.
So long story short.
I just like envision like these guys in these black suits,
Right?
and there's like faceless, like at the roulette table,
Yes.
right? Like, this is what we're gonna do now. You know what I mean?
That's what it feels like. So
Ugh.
every day when I read an economic report come out and I see that it was off, and so then I see the stock market and the bond market going crazy, and I'm just like, Jesus.
Yeah.
And it's just because they guessed that this is what was going to happen, and maybe it didn't happen, maybe it was underestimated, maybe it was overestimated, but either way,
Yeah.
there's usually a reaction for that.
Yeah, because right now, what is it? High sixes right now? Sevens?
For
the interest rates. Like, I just saw
For-
something that was like back up to 7 again. Is that
Yes.
true?
Yep.
Okay.
It can be. It just depends on obviously your
A
situation.
bunch of stuff,
Yes,
yeah.
lots.
Yeah.
Please don't quote rates.
Yeah,
I'm
don't
not
quote-
quoting
we're not
rates.
quoting rates. We're saying around.
Around. But and that's why I say the national average is right under 7%.
Okay.
Yeah, and there's a lot of articles out there. You're free to Google and say what is the national mortgage interest rate right
Mhm.
now, and it's probably going to come up around 6.9
Okay.
on there. Doesn't mean that that's what the interest rates are, because again, everybody's situation is
Yeah.
different. But that's the national average on a conventional.
Right.
Mhm.
And it also is different too. Like if you're buying multifamily
Sure.
and,
Yep.
and commercial and all of that.
Yep.
Too, so.
Yep.
Okay.
Yep.
So what should buyers be doing right now to prepare for any of those changes? I mean, just continue to keep the credit good, and I mean, what are your thoughts on that?
I would say just continue with your plans the way that you intended. If
Yeah.
your plan was to buy a house this spring, buy a house this spring. I've had to present this question to several of my buyers because of all this chatter about interest rates.
So much chatter.
There's so much chatter, and there's so much focus on just what's the interest rate. And then when
Mm-hmm.
I show the difference between a 0.5%
Yeah.
on a payment and the minimal impact that a 0.5% can have, people, they go, oh. And so there's this huge focus on interest rates. And I think it's because we like to have something concrete to be mad about.
Mhm.
We want to be mad.
Yes.
We're going to be mad about the interest
Those
rates.
damn interest rates.
I know. So the rates are what the rates are.
They are.
So
Yep.
I have, even for the last 2 years, I've said there is plenty of opportunity out there.
Mhm.
The opportunity is individual to each person. So if you plan on buying a home, keep your plan in place, because we don't know what's going to happen. Remember last year, they thought the rates were going to end up in the high 5s. They ended up near 8.
Mhm.
And so those that were waiting
Yep.
ended up with a different interest rate because they were waiting. Just like the waiting for the housing market to crash, waiting for prices to fall. I'm seeing a lot of missed opportunities because of waiting, because of chatter.
Mhm.
And so I would just talk with your professionals, experts. we will be honest with you.
We will totally be
And
honest with you.
If this is the time for you, make it happen.
Yeah.
If you feel like you want to wait, here's the question I want to ask you. What are you going to be madder about? That you buy a home now that has a slightly higher interest rate, but a lower price, or you wait to see what's going to happen with the interest rates. And let's say their interest rates do go down, but prices are higher.
Mm-hmm.
What are you going to be most upset about?
The higher price.
Mm-hmm.
Yeah.
Yep.
Yeah. Well, that's why I always tell my clients, the ones that are kind of like, oh, the interest rates. And I'm like, hey, once those like even dip like
Mhm.
1%, 0.5%,
Mm-hmm.
the floodgates are going to open,
Mhm.
and you're going to get this crazy onset of buyers,
Mhm.
and it's going to drive the houses up again.
Yeah. And it seems like we're already seeing that.
Oh, yeah.
This year.
Mhm.
Usually we see our spring market hit about mid-March, and it started out of the gate.
Yeah.
At the
Yeah.
beginning of the year this year.
It's been busy.
It's insane how many active buyers are out there. I think that this is, again, my opinion. I think that people are comfortable that rates are in the 6s.
Mhm.
That's probably where they're going to be for a little bit. People want to buy, people want to sell, people have to buy. There's people moving. Many different scenarios, divorces, family size changes, stuff like that. So people, there's always going to be a need to buy and sell homes, right?
Mm-hmm.
So
for sure.
it's
well, and what is crazy to me, you'll go buy a car and you get what, 10-15% interest,
some of those
maybe.
interest rates are up there,
but you don't even blink an eye to that. Or like your Amex card or any of your credit cards, 20% interest on some of those.
Yep.
you don't blink an eye. You just
Right.
pay it, right? So what's
Yep.
what's the difference?
Mm-hmm.
Yeah. it's
At least
crazy.
with this, a home is usually an asset. And so that's, you're building equity as you're paying
it's a
that
better
down.
investment.
Mhm.
Yeah.
Yep, it's a much better investment. Whereas car payments are so expensive now, and I see and it still just shocks me when I see payments $700-800 a month, $1,000 a month, $1,200 a month.
No.
Oh my God, it gives me anxiety just to even think about, because that's that's a whole paycheck for somebody.
Yeah.
But people are doing it.
I know. It's crazy.
So that'll be a really big impact on your mortgage qualifying, by the way.
I mean, I guess you could live in your car.
just for the record, even if you have no other debts, if you have a $900 a month car payment, that's typically what I'm seeing, 25 to 30% of people's income.
Wow.
Alone.
Wow.
So when we're qualifying on income, if 30% of your income is being eaten up by a car payment,
Mhm.
usually a house payment we can use, if somebody had no other debt, we could go between 40 and 45% of their gross income.
Mhm.
When somebody has debt, we have a little bit less to work with, obviously. But just in general, with a 50% debt to income ratio on a conventional loan, if 30% of your income is already being used for your your car payment, on a debt to income ratio, that leaves about 20% of your income to use for a house payment. So
Wow.
if the majority, your car payment is going to end up being more than what you can qualify for in a mortgage, because we only have 20% left to use.
Wow.
And you're already using 30 of it
Yeah.
for a car.
Yeah. See, there
So,
you go. That's some things to consider.
It's a numbers game.
It is a numbers game.
Mhm.
So I have a question. Of course, we got a comment here. Who is this? Oh, it's Frank. Good morning, Frank.
Hi, Frank.
Big fan. He's a big fan. He's a big fan of you too. He's like, I love Dede. She's so funny. So I get this question asked a lot.
Mhm.
What is the benefit to shopping around lenders? Because they ask a lot, well,
Mhm.
like, can I get a lower interest rate with this person versus this person?
Mhm.
Does that come into play, or is it mainly like origination fees and like all of that you could save on?
So there is all of that. Yes and no. There's a price to everything. So when it comes to interest rate, we all can offer the same rates. Everybody has mostly the same opportunities.
Mhm.
What's going to be the difference is if you call me, you say, well, what's your interest rate today? Well, it can be whatever you want it to be.
I'd be like, what's your name? What do you want it to be?
What's it worth to you? And I try to teach this, but people, and unless they see it in person, they don't really get it. But you can get whatever interest rate you want that's available on the market. 3% doesn't exist. 4% doesn't exist.
Right.
The fives, there's some available in the high fives. You're going to pay a lot of money for it. So what it is how much are you willing to pay for that rate? And when I compare buying down rates to my clients, when we go over this, I compare it to buying a car. So if you buy the base model car, you're going to pay the least amount. Okay. If you want some more features, you want to end up in the middle, kind of, you're going to pay more money. If you want all the great, you want all the bells and whistles and all fancy.
You want the car to drive itself.
Exactly. So we're going to notice you driving down the street. You're going to pay a lot of money for that, right? And that's how interest rates work. You're going to pay for a premium. So if the national average is about 6.9 right now, and that's going to cost 1%, either 1% origination or 1% discount point, that's kind of your middle of the road car, right? If you want a lower interest rate, you're going to pay points for that lower rate. And so what points are? Points are a percentage of your loan amount as a fee to buy a rate. Now here's the kicker. There's not a black and white formula for that. So there's no set amount that says I want to pay $1,000 so that I go from 6.99 to 6.75. It doesn't work that way. So the cost of money changes actually by the hour, by the minute.
Really?
Yep. And we don't see those changes unless they're pretty drastic during the day. And that's when there's usually some major economic reports that are going on. Maybe there's some social graphic things that are going on that's really impacting the stock market. So usually once a day is when we get those changes. But the cost of money changes every single day. You know, the cost of gold changes, the cost of silver changes. Anything that's financial, that's changing on the minute. So that's why there's no set amount of I want to buy down from 6.99 to 6.5. Maybe on a really good day, it's only 0.5%, or excuse me, half a discount point. So if you have a $300,000 loan amount, that's going to be $1,500 to go down 0.5%. On other days, that could be 2%. So that would cost you $6,000. So there's no reason. There's no rhyme or reason. It just depends on what's going on in the market and how the rates look that day. So when you are calling around for rates, it's not about the rate. There's going to be those that all they care about is that number, regardless of what that number is, and not even understanding what goes into that number. I see that a lot, and that's okay. There's a spot for everybody, and the biggest thing is though, when I ask somebody, when I say, okay, well, this is where we're starting out. They're like, well, so-and-so said that they would give me this. And I said, okay, do they, what kind of fees are you? Because we all know what's normal in the market, what's not in the market. We know who's buying the market. We know who's quoting to get the business. That's a trick everybody can use. And
bait and switch.
It is. And so anyway, I'll ask, well, what are the fees that you're being charged for that? Oh, they told me there's no fees. I'm not paying any fees for it. Okay. Sounds like a really good deal. Would you mind sending me your loan estimate? Just so I can take a peek at it, just so I just want to compare and see what we're looking at. And I always give people the opportunity to do this because we will match if it's a reasonable, because everybody, we all want the business. And if somebody's quoting something different, and it could be a different day. So maybe somebody check rates on Tuesday and they come to me on Thursday and rates have gone up. Well, what I'm going to quote to them is going to be higher than what it was on Tuesday. So anyway, that's another part of it too. Rates are not, when you're quoted a rate on one day, it doesn't stay that rate until you lock in. So anyway, I'll ask people, can you please send me your estimate just so I can take a peek at what we're working with. 10 times out of 10, there are fees on that.
Oh yeah, for sure.
And I'll point that out, and they're like, "Oh, well, they told me there's no fees." every time. And I see that mostly with online type of situations. And that's where it can get really tricky. And there's a reason why online is not as widely accepted around here. While it may look good, what they're presenting, and I think, unfortunately, I think people that, because they just don't understand how it works, all they see is the interest rate. They're like, oh, well, I got this interest rate. They don't see that there's $20-some thousand in fees for it. They just see the interest rate right there. And then when it falls apart 3 days before closing, and I'm getting that phone call, this just fell apart, such and such. Can you take a look at it? Can you take a look at it? So when you shop around, for me, I feel like it's about value and who you're working with.
Relationships.
Absolutely.
Person.
I was having this conversation with one of my clients the other day. We're working on another investment property for him, and he's very money savvy. And he goes, you know what? I tell people, do you want the cheapest? Then just go willy-nilly somewhere online, and you might find something that's a little bit cheaper. He goes, or do you want somebody who's going to hold your hand and be with you every step of the way?
It's a big
and that you
transaction.
Can count on. He goes, that's what I tell people. He goes, because he knows, he's very savvy, and I know what access he has to things, but he appreciates the relationship that we have. He knows that he can trust me. And
he can call you up and say,
absolutely.
Hey.
He texts me all the time. Hey, can you run numbers on this? It's a long-term relationship. So that's what I think is what matters. And I hear that. I get referrals from people who have said, you know what, I have already spoken with this person, but I'm not really crazy about what happened. And so I was referred to you. And so that's the part. And I'm not going to be the best fit for everybody either. So I'm sure there's people that I've met with that, maybe we didn't jive and they went someplace else. That happens. I get that.
Same with me.
Yep. But
you're not going to be for everybody.
Exactly. So, and I teach this in the first time homebuyer class too. It's not about price.
Yeah.
Most people know when something doesn't feel right, and it doesn't hurt to get a second opinion. But if you have that relationship with that person has a good reputation, that's part of it too.
Yeah.
Because if that person has a good reputation, they're not going to do something to try and be shady. And you can't be shady in the market because there are government processes in place that monitor what we can do or we can't.
Her phone's gone off. It's got a groovy song.
It's like the quietest thing on there.
I love it.
So it's on where I think people might feel like they're getting ripped off is when they go into a transaction with an unknown financial institution and the focus is on interest rate.
Yeah.
But they don't understand how much it costs to get that interest rate.
Right.
So it's really important it's the relationship. It really is. It really is. And I will never promise to be the lowest because I'm not.
Yeah.
My value is not money or the interest rate or the fees. My value is me holding your hand. I'm going to be there. I'm answering your texts at 9:00 at night. I was working at 10:00 last night, emailing people. That's the value.
Yeah.
You know that you can get a hold of me.
You're not going to get that with online.
Exactly. You know that I'm going to sit down with you. We're going to have many conversations. We're going to have tough conversations. And so the long story short about shopping around, you certainly can do that.
Yeah.
And again, that's what's important to you and not the relationship or who you're working with by all means. But for the most part, we're all going to offer pretty much the same.
Yeah. And another point too, as a listing agent, we look at that. I mean, I do anyway. I look, okay, who's the lender? Are they trustworthy? Like, can I work with them? You know, because some of those online, you're like, I've never heard of these people, and you try to call them, nobody answers. You know what I mean? So that does come into play too.
It really does.
Yeah.
And you can basically find anything that you want online at just a moment's notice.
Yep.
Right.
Pretty much.
Is it accurate?
No.
Is it true?
Probably not.
Is it reliable? That's the truth. That's the hard one. Is because I get those phone calls from you guys. I love that you guys call me and say, you know what, I've got an offer from this random online place.
I think you saved one of my transactions. Like,
Yep. And it happens. And just because they show something online does not mean that it's legitimate. And it doesn't mean you're going to get to the closing table.
Right.
That's the other part too, is if there are any kind of weird pieces to your puzzle, it's likely you're going to have some challenges and maybe not end up closing.
Yeah. And communication is huge. Like, you got to be able to communicate with that lender because there's things that come up at the, the last minute, right before closing, even the day of closing sometimes, right? So communication is the biggest thing.
I've had a few clients that have gone that direction because what they were presented with online was a little bit better scenario for what they wanted, but the transactions were a disaster. Didn't close on time. One of them was severely delayed, and each one of them has said we should have stuck with Dede.
Yeah. Oh, I've seen it. I've seen it.
So I'm not.
It happens.
It happens. So it's just that it's a. Sorry, I don't mean to seem like I'm trying to toot my own horn. I'm trying to push value in the relationship of the person that you're working with.
Yeah.
Whether it be me or someone else. There's a lot of great lenders in this town.
Yes.
They're going to work better for you than than someone because you got 0.25% less.
Yeah.
Some random place online.
Right. I love that. See, there you go.
Yep.
Hey, Raymond's watching. Hey, Raymond. Another big fan. What's up? Okay. So we're talking about shopping around. So
Mhm.
can you break down the process of getting pre-approved
Yep.
for mortgage and why it's important to get
Mhm.
pre-approved
Yep.
before you even step foot into a house?
Yep. Oh
Because
goodness.
I preach this all the time.
Yep. This is one of the things I preach as well. So I start this conversation out with first-time home buyers a lot.
Yes.
And because I hear a lot, I don't know what the process is. I don't know where to
Where
start.
to start?
And I'll say, have you bought a car before? And they'll say, yep. And I said, have you gotten a loan for that car? Yep. It's not like that.
Nope.
It's not like that. I have had to provide a pay stub once, but the rest of the time they just accept what you tell them. That's not how that works.
Yeah. Nope.
It's not. We're loaning hundreds of thousands of dollars.
A lot of money.
We want to make sure that it is a good risk for both sides.
Yes.
And we want to make sure that we're not putting you in a uncomfortable position, because on paper, what we're going to have on paper is going to be different than what your reality is.
Yep.
Because we don't have your whole reality. So that's why it's extremely important to go through the full pre-approval process. Now, you can go online, right? And get a letter in 5 minutes. You put in whatever information you want, and in 5 minutes, you've got this pre-approval letter spit out.
Mhm.
It's not like that.
Yep.
The real is not like that, I promise you. And the reason that is because we actually verify the information that you give us. And that's what makes the difference between a pre-qualification and a pre-approval. And the savvy realtors, such as Billy, they know the difference between the two.
Yes.
They know they know the lenders who do the work to make sure somebody's pre-approved versus the lenders who just go off of the information on the application. And so here's the reason why it's a big difference. I use this in classes that I teach. I had a client submit an application with $9,500 a month in income. And then I got her documentation, pay stub, stuff like that. And I was coming up with $4,700 a month. I wasn't seeing where the 95 was coming from. And so I reached out and I just said, is there a raise coming? Is there something maybe I don't have documentation for?
Mm-hmm.
So, I just put that in there to get things started.
Do
you know the difference on what you can be qualified for on $4,700 a month versus $9,500? That's a huge difference.
Wow.
Do you know what that does? It sets people up for failure.
Yeah.
So if I would have said, okay, based upon your $9,500 a month, you're qualified for an $800,000 home. She goes with Billy shopping at $800,000 homes, puts an offer in, then we get her pay stubs and verify her income after that, and she's qualified for $300,000.
Yeah. Yeah, and that's a letdown for her. It's a letdown for the seller. I mean, it's just
there's a lot of time and effort and work that went into putting in that offer.
Yep.
Because of misinformation.
Yep. Wow.
So that's why it's extremely important to have a pre-approval done. That's why we ask for that documentation up front so that we know exactly what we're working with, so that when you go shopping for a home, you're shopping in the price range that's where you are approved, where it's maybe your budget. But you're not on a goose chase on something that might not be attainable.
Yeah. Well, and then don't even get me started. I had like a tangent the other day because in 1 week I received 3 offers from 3 different agents with no proof of funds, no pre-approval, nothing. And when I asked for it, they are not pre-approved yet. We're going to go see the lender after we get our offer accepted. I'm like, that's not going to happen. Like I will obviously still present the offer because that's my duty. I still have to present the offer, but I tell my seller, we don't have a full offer here because we don't know what their qualifications are.
Yep.
And I've asked these agents, like, what are you doing? Why are you even stepping foot in this house, having people leave their house for somebody that you don't even know can buy the house?
Yes.
It's like, and it's running rampant lately. I don't know what's going on, but that's the first thing I asked. Are you pre-approved? Are you pre-qualified? If not, I'm going to get you somebody that can help you.
Exactly. Yep. And it's not an instantaneous process. And then also, we are not sitting here waiting for business. We're busy.
Yeah.
So when you call a lender, especially if it's a reputable lender, they're going to be busy. And so when it really creates challenges when I get a call from somebody who, and it could be from the realtor, it could be from the buyer, that said, oh, I put an offer on a house, but I need to get pre-approved. I'm like, I am booked up for the next 3 days.
And you lost the house.
Exactly.
So that's why you need to get that done first.
Yep.
So you are ready to go.
Exactly. You need to know for sure what you're pre-approved for. Imagine if you were selling the home and you had kids at home.
Yeah.
And you had to pack everybody up and leave for an hour so that your home could be showed, but it was to a buyer who hadn't even talked to a lender yet.
Right.
And then the offer's presented, and then you find out that that buyer was never approved in the first place. Let's say they couldn't even be approved. How would you feel about having to pack all of your stuff up and your family up and go leave the house for an hour for somebody who hadn't even talked with a lender?
I'd be fuming.
So it's
this is like one of my biggest pet peeves.
It's all of our pet peeves, and I know it doesn't sound nice, but
it's the reality of it.
We're in such a society that it's just, well, I'm just making a decision on a whim like this.
Yeah.
Oh, I decided I'm going to buy a house today, and it with home loans and mortgages and real estate, it just, there's so much detail that goes into it. The people that are involved, sellers, realtors, lenders, there's a lot of time and work and a lot of pieces that have to come together to make that happen.
Yep.
Please help us make that happen before we go shopping.
Yes.
Please, 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 please.
Yes. And realtors that are watching, do not show houses to people that are not pre-approved or pre-qualified. Please. Jeez, please. Okay, I'm done now.
All right. Yeah, it's you can lose a home for not doing that because there's just not enough time, and especially if the financial situation has a lot of pieces that we have to figure out how to put together to make it work, you're going to end up losing the home because the market is hot. There are multiple offers out there. I've seen some great homes come on the market, and the next day they're under contract. And if you don't have your stuff ready, you're going to lose that home. And we don't want to see that happen. We want to see you get that home. So please help us help you.
Yeah.
And call us when you start thinking about buying a home. Even if you don't plan on buying one for 6 months, I tell many people, let's just get your stuff ready because inevitably that perfect home is going to come up sooner than what you think. And if you're not ready, you're going to lose it.
Oh yeah. Because there's been instances where I have a multiple offer situation. Okay. And I've got 3 offers in front of me. This one might be really, really high and looks great. Right. But there's no proof of funds. There's no pre-qual. There's no pre-approval. There's nothing. So they're gone. Like that, I make a call. I do make a call like, hey, what's going on? This and that. And if they tell me, oh, they haven't seen a lender yet, see you later. Like, you know what I mean? Obviously the seller has to make that final decision, but you know what I mean? Like it's not going to be taken seriously, that offer, because it's not a full offer.
Right. So if we don't know for sure. So please, please start the process much sooner than the day you find the house.
Please, please, please. Okay. We're done with that part now. Oh, I do have another question. So I get a lot of this when I tell them, hey, we need to go talk to a lender, this and that. Well, I don't want my credit pulled. It's going to ding my credit. What do you say to that?
That comes up almost every single time. 9 out of 10 times I hear this. And we can't give you a full approval without a hard pull because our systems just don't read a soft pull credit report. We can pull a soft pull, but that's not going to tell us what you're pre-approved for. When we pre-approve somebody, we run the credit report along with all the other financial information through an automated underwriting system, and it reads the credit history. It's not just about your credit score. It is about your credit usage, your history, your payment history, what's open, your balances. And so the automated underwriting system needs to read all of that. And there's one conventional option that will work with a soft pull.
Okay.
percentage of people who fit in that box is really small. So for the most part, we need that full credit report to be able to explore all options. Pulling your credit is the least impactful thing on your credit score.
Yes.
It is this much. Oh, sorry. You can't see it. Can you see that? That much. I know the focus in certain, depending on where you get your information from. Oh, don't pull your credit. Don't pull your credit. You're going to crash your score. You're going to trash this. You're going to trash that. If you're applying for a ton of unsecured credit, and I have seen credit reports, well, I'll have an inquiry list that long, and the wording's that little. So I'll have a half a page of inquiries of credit cards, unsecured loans. I can always tell when somebody's in a financial situation because of the type of credit that they're applying for and how much.
What is an unsecured loan?
So an unsecured loan is sometimes what's one. Was there a Big Sky Financial here or something like that? Okay. So that's typically an unsecured loan where somebody goes in, they're just taking out a personal loan and there's no collateral attached to it. That's a higher risk loan. And so it's going to report differently on your credit report.
And that'll ding your credit?
Yeah.
Okay, good to know.
An unsecured loan is going to have a more of a negative impact because it's a very high risk loan. There's no collateral attached to it. Usually a very high interest rate loan. But they're out there for a purpose. So anyway, if you have just a ton, and then when people go car shopping, I will see 25 different inquiries on a credit report when shopping for a car. So it's really important to not give them your social security number. I've heard many times where they said, well, don't pull my credit, but they have your social security number and they're going to do it. Yep.
Oh, man.
So in those cases, we might see a 20-point impact, but for the most part, if you're very rarely pulling your credit, you might see it a few points. And then if you are talking with other institutions or other lenders, they say, I've heard between 2 weeks, 14 days, and 30 days, there shouldn't be an impact on the credit scores. We should all pull the same scores. During that time. So the only time that there would be a concern is if you are on an edge of what that credit score needs to be to qualify, then we may want to say, you know what, maybe we should wait. But if it's within that general 14 to 30 day period, it should be fine.
Because the lower your credit score, usually your interest rate's a little higher, right?
Yep.
Typically.
Okay. Yep. When we're working with the lower credit scores, which we do, there are parameters that we do work with. It will have an impact on what types of loans you can get and also your credit score, or excuse me, your interest rate.
Okay. Good to know. Good to know. So other than going out and applying for a bunch of credit cards and stuff, what are the most common mistakes people make when applying for a mortgage, and how can they avoid them?
And some of the things that I see are misrepresenting information.
Putting in $9,500.
Yeah, I do see that a lot. I would say also finding the house before you apply for a loan, and so then we're trying to scramble to get things done, and especially if it's a messy financial situation, puzzle pieces. If you're self-employed, please know we are going to get your tax returns. And I know self-employed is tough, but if you tell the IRS that it takes all the money you make in the business to run your business and there's nothing left over to pay your bills, that's what you're telling us too. Yes, there are bank statement loans where they you go off of the deposits in your bank statement, but guess what? They do factor in the expenses off your bank statement too. So that's something that people don't realize. And it is a higher interest rate and a much higher down payment loan. So a self-employed can be tricky. And so just know that we will have some, depending on how those taxes are filed, we'll have some work to do there.
And so some of the things that you'll ask for, just so like if people are watching, they're like, I'm thinking about it. W-2s. What else do you need?
So we call it the 222.
This is
way back from 2005 when I started as a mortgage processor. The 222s.
Two.
2 2 years of tax returns,
Okay.
2 months of bank statements, and 2 pay stubs. Please
Oh.
don't send us any more than what we asked for. I get this a lot too. Well, I thought it would just be better if I provided you more. I don't, please don't.
Don't do it.
I don't want it. It's just extra work for you, and I'm just going to toss it. I promise you, I don't need 2 months of bank statement, or excuse me, 2 months of pay stubs. I want 2 pay stubs.
2 pay stubs.
2 pay stubs.
Not 2 months pay stubs.
Yeah.
So like if you, a person like me,
Mhm.
who is a procrastinator with their taxes,
Mhm.
do you want the previous 2? Like, does it
Mhm.
have to be like, so say I was coming to you right now to
Yep.
apply for a loan, you would need 23 and 22.
Nope, 21 and 22.
Oh yeah, because 23 hasn't been done yet.
Yep, because 23 hasn't been done yet. So
Okay.
we will ask for 23 W-2s for those who are W-2 wage earners. But for taxes, we don't need the 23 taxes because you have
'Cause it's not
technically,
done yet.
they're
Okay.
not done yet. So we're
Okay.
not going to request them. For self-employed clients, we're going to get 21 and 22, and then a profit and loss statement for 23.
Gotcha.
And we can't use the profit and loss for income for qualifying. The purpose of the profit and loss is to make sure that your business is similar or better than the year before, or was there a reduction?
Okay.
And if there is a reduction, we're going to have to discuss that.
Got it. Okay. Yeah, because for us self-employed
Yep.
people,
Yep.
it's always a little bit tricky.
It is tricky. It is like, how do we minimize our tax liability? But yet, if
Yes.
I want to get a loan, I have to
Yes.
show that I made some income. So
Right.
it's
It's a balancing act.
it is a
for
balancing
sure.
act for sure.
Damn tax people.
We use a lot of cosigners for self-employed people.
Oh yeah. Yes, that's true. That is true.
Yeah.
Anything else that they should think about or avoid?
If you have applied for a new loan recently and taken out a new loan, please let us know because it doesn't always show up on the credit report.
Okay.
And sometimes we get some surprises later on down the road because we didn't know about it and it wasn't on the credit report. But then when we go do the soft pull before closing
Yes.
and we find a new loan on there, that can that can have not a fun impact on things.
Have you seen it where it like prevented a closing?
Absolutely. Yep.
Yeah.
So if you please tell us, and it's best that you tell us everything up front and we can determine how to use that information. Then to keep it inside and hope that we don't find out.
But you'll always find out.
Exactly.
It always comes up.
Yep. It's easier for us to manage it at the beginning than to try and save it at the end.
Yeah.
Yeah.
Well, and because you're going through the process, right? You put out money for a home inspection, probably appraisal at this point, right? And then to just be like, oh shoot, you can't buy it no more. You're not going to get that appraisal feedback.
Right.
You're not going to get that home inspection feedback.
Yeah. And then just all the time and the disappointment.
Yeah.
We get excited about getting you into a home as well. So we're just as emotionally invested as you are in this. And to have to tell somebody, we can't do this because you took out a new loan that you didn't tell us about. It wrenches our hearts just as bad as you hearing it. So please be honest with us. And then job changes. We still see a lot of people who are moving jobs, and I've had some really great clients. I absolutely love that they call and they ask me, you know what, we're thinking of doing this. We're thinking of making this job change. Is this going to impact our loan? And it very well could. It could, depending on the type of income, are the hours changing? Are you going from a W-2 to a sales position where it's commission?
Right.
So yes, it can impact, and we need to talk about these things before a home, before you go into a home.
Yeah.
Yeah.
Absolutely.
Unfortunately, we had to deny a loan last winter because somebody made a job change that they didn't tell us about. And we found out when we were asking for updated documentation because it had been a few months and they didn't want to give us that information. And it was because they had lowered their hours. And so their income drastically decreased. And we had to deny that loan. That loan was already in effect.
Oh.
Yep.
Yikes.
Yep.
And that brings to, if you are in escrow,
Yes.
do not
do not quit your job. Do not take out a new loan. Don't buy a new car. Even with furniture, please wait until after closing to do those things.
I mean, obviously, unless you have cash. You can,
right. Yeah, you can pay cash for it.
Yeah.
I love that people call me and ask me, is it okay if I use my debit card? I'm like, yes, that's perfectly fine. You can pay cash for it. Somebody else can buy it for you, but please do not take out a new loan. Because when we're constantly verifying the financial picture, and if somebody's maxed out at what they can qualify for based upon their current expense situation, and we pull the soft pull right before closing, and there's another $150 a month payment or something, whether it be for furniture, whatever the payment is, and we don't qualify anymore. So now we have to figure out how are we going to get rid of that $150 a month payment to save the transaction, or the transaction will be declined.
So that's even if you already have a credit card and then you just go and buy a bunch of new furniture.
Exactly.
Yeah.
Yes. Yeah. Yep. Because we do that soft pull right before closing.
Yeah.
And if those payments come in higher, and I have had that happen too, where payments came in too high, and it impacted the qualifying. So we had to scramble to get those payments paid back down.
Yeah.
To keep the loan going.
And even if you get to the closing table, you sign everything, it's not done yet.
Right.
It has to record.
It does.
Once it records, then you can do whatever you want.
Yeah, you can go crazy. I tell people at the closing table all the time, wait until, usually things record the same day. So I say, wait until tomorrow. You can quit your jobs. You can take out as much debt as you want. You can buy as many new cars as you want tomorrow.
Go on that safari trip. Yes. But I mean, always make sure it's recorded first, right? Because again, depending on what time you close that day, it might not record it till the next day.
Exactly. Or, let's say something comes up with the seller and funding of the new loan gets delayed. 7 days. Well, now we have to re-pull a new soft pull credit report, because those other ones are only good for, I think, 10 days or so, 10 or 15 days. So we have to pull a new one. And understandably so, if you bought a house, you're like, oh, well, everything's fine. I'm going to go get the new furniture. I'm going to go do this for the new house. And because that new loan hasn't funded yet, and we have to re-verify everything, and now we have a problem.
Yeah. We don't want problems.
Yep. We don't want problems.
We want to get you in the house.
We want you to be in the home.
That's why we are here talking.
We really do want to put you in the home.
Yeah, that's our goal. That's our main goal, is to make you happy. Everybody's happy at the end of the day. Let's see. Oh, this would be great. How can borrowers with less than perfect credit score improve their chances of getting approved?
It's a great question.
And I know you've helped a client before do that.
I've helped a lot of clients in I think I'm going on, I can't remember, 16 or 17 years. I have to go back and check. And I've helped a lot of people overcome credit challenges to be able to get into a home, and we worked with credit challenges. A lot of times people think that their situation is much worse than what it is, and that's always fun when I can show them, you know what, this isn't as bad as you thought, and we can move forward. Even if it's not the most perfect situation, sometimes we can move forward. If we have work that we need to do, then I'm going to give you that information to do that. I'm going to say, here's what we need to do to get you to this point. And I have several clients right now that we are working on that specifically. They're making wonderful progress with it. But the thing is, you have to be willing to do it.
You do
as well. I've worked with many who, I know it's an extremely overwhelming situation. I've been in credit challenges in my life.
Me too.
Before I became an adult.
I don't even think I'm an adult yet. No,
exactly. And got my shit together. And that's the word that I want to use.
I love it.
Because financially, when you're in a financial challenge, that it just seems like a snowball effect, and it seems very overwhelming. But you have to be willing to do the work to get out of it. And it's not an instantaneous process. And that's part of it too, is it will take time. I have a client right now, it's probably going to be 6 to 12 months before they're going to be ready to buy, but they've started the steps. They've taken the steps that needed to be done, and they worked on what they can. And now it's just a waiting period, because the credit scores don't automatically go up.
Right.
It takes time. It's a slow process to get to that point. So please don't be afraid. Don't be ashamed. We've seen probably everything and more under the sun. It's up what we're going to do. And not everybody's the same, because I've found this out too. I've had people refer to me because of this. Not everybody is the same. If you don't feel like you're being given the direction that you're looking for, please get a second opinion. I had somebody tell me recently that they were told just to look at their credit report. I hear that a lot. Actually,
Credit karma.
I hear buyers that are told, well, just look at your credit report and work on those things. And okay, they're not wrong in saying that, but how many of us know how to read a credit report? Yeah. So if you're serious about changing the situation to be able to buy a home, and you're willing to do the work, check with a lender who's going to work with you on that. We're not credit specialists. We're not credit repair specialists. But
you know what it takes to get there.
Yeah. Here's what I recommend working on. Here's the steps. Here's the people who can help you with it. Credit repair companies, I'm on the fence on those because I'm not really sure. Reputable ones, because you'll pay a monthly fee, and I don't know. Clients will get reports saying you've had 43 things removed off your credit report, and I pull a credit report and it's the exact same as it was 3 months ago. So you really be careful about stuff like that. I think in many situations, if it's a true debt that has to be paid, it has to be paid.
Yeah.
I don't know of a way to have it
magically disappear.
Some good stuff with collections, medical collections, although medical collections are not required to be paid off or to get a mortgage, they do negatively impact your credit, and which lowers your score, which can cause challenges on getting approved, right? So it's kind of a domino effect. But when you pay medical collections, within 30 days, those are completely removed off of your credit report. And so we're seeing scores come up 20 to 30 points when those are paid and removed off of there. So that's really a huge plus. I had a client tell me recently, we're working on getting credit rebuilt, about pay to remove. And I had never heard of this before. So when you're paying your collection, and again, this is third-hand information. I've not tried to experience it myself just to see, but we'll find out here pretty soon how this looks. But if you are talking with the collection agency and you pay in full and ask them to remove it from your credit report, as long as you've paid in full and asked them to do this, they'll do that. Yeah.
Interesting. That's good to
so
know.
That's something new that, again, I haven't seen the credit report yet. We'll probably see that in about 3 weeks.
Okay.
Yeah, but I'm pretty excited. I had never heard of that before.
So you have to ask them.
Yes, and they won't do it with your steadily. You have to pay in full.
Got it. So if you settle, it'll still remain on your credit report?
Yep, it remains on the credit report, but it will show settled in full.
Okay. Gotcha.
Yep.
Okay. So it's better to pay in full for reasons of your credit score.
It could be.
Okay.
Yep.
Possibly. Okay.
Yep.
Interesting. Huh. I did not know that.
I know. I didn't know that either. It'll be fun to see the credit report. See how that works.
Interesting.
Yeah.
Okay. Cool. Well, we got a few minutes left. Did you want to talk about some of your programs you've got going on here?
Well,
or anything you want to talk about?
No, we've got some really good stuff on here. Just want to remind people that there are down payment assistance programs for higher income households. So we have a couple of them. We have one that'll go up to $128,000 a year, and one that'll go up. We just brought out a new one that'll go up to $152,000 a year. So I know it doesn't feel like that's considered a high income household because things are just so expensive. Yes. Life is so expensive right now. Yes. So it's hard to put money aside. And the typical down payment assistance programs for first time home buyers, the income limits are much lower than that. So we brought these out for those who are in that income range that, it's still challenging to try and save up for a down payment.
Yeah.
And you don't have to be a first-time home buyer either to use these
Nice.
programs. So let's say you bought and sold a home in the last 3 years, and you want to hang on to the proceeds and use them for something different. We can do an assistance program to cover the down payment so that you can hang on to your funds.
Nice.
Or maybe you went through a situation where the proceeds had to be used for something different. Let's say you had to pay off a bunch of debt, which put you in a good position financially, but didn't leave anything left over to buy another house, right? We can help with that. Let's say the funds were used for, it doesn't matter what the funds were used for, but you had to use the funds from the sale for something different. And now you want to buy a house, but you don't have a down payment because of that. We can help with that.
Oh, that's nice.
Mhm.
Because that's the biggest thing is the down payment,
It
right?
is.
Not everybody
It
has just like this crazy fluid cash.
Exactly. Or they have a little bit,
Yeah.
but they want to hang on to that.
Right. Or
And-
something else,
Yep,
or maybe a
absolutely.
remodel, or
Mhm.
yeah.
Yep, absolutely. And when I mention those income limits, those are not total household limits. So let's say you have a 2 household income family, and we only need the one income to qualify.
Mhm.
As long as it's under that limit, we can leave the second person off.
Oh.
You can still be on the loan, but I don't have to include that income.
Oh, that's
So
nice.
let's say I have somebody who's making 140 a year and someone who's making 60 a year. That's a $200,000 household, right?
Yeah.
But it's too high for
For
assistance.
the assistance.
I can leave the $60,000 income off if we can qualify on the 140.
Oh.
Yep.
Nice.
Mhm.
And the down payment assistance, is there a limit on that? Is there
No, there's not a limit. It is a second mortgage, so you will have 2 payments. And I've had clients take advantage of these. They've been super excited about it. So you have a first and a second. And lost my train of thought. You'll have a first and a second. So you have 2 payments, but I always encourage people to pay off that second as soon as possible.
Is it a higher interest rate?
It can be a
Yeah.
higher interest rate. One of the programs that we have, they're the same interest rate. The other one, it is a higher interest rate, but it's a 10-year loan. So the payment is still very reasonable for borrowing that amount.
Right.
But if you can just get that paid off, you might as well.
Yeah. And on that note,
Mhm.
like once you get a mortgage, is there a good strategy to try to get that mortgage payment paid off quicker?
Yep. So there's a couple things I usually recommend. I always recommend putting extra towards principal to pay that loan off.
And
earlier.
you have to put that in
You do.
the thing
Mhm.
to say that you want it towards principal.
Yep.
Okay.
Yep. You have to let your servicer know that you want to
Mhm.
put that extra towards principal, because as you pay the principal down, you're collecting interest on this huge number right up front, and it's collecting interest from day
Yes.
one. So anything you can do to get that number down is less interest you're going to pay over the life of the loan. So there's a couple different ways you could do that. You could work your budget for biweekly payments. Some mortgage servicers will allow biweekly payments, others will not. There's companies online that you can pay for. We don't recommend that because we've seen late payments happen too many times where that company is collecting your money and they're not making the payment.
Oh.
And the fees for that are usually pretty high.
Yeah.
So you can actually do this yourself. If the mortgage servicer doesn't offer a biweekly payment, I don't think there's not any that I'm aware of that will accept partial payments because the systems are just not set up to do that.
Right.
So what I usually tell people is take half of that payment every 2 weeks. So when you get your paycheck, take half of your mortgage payment every 2 weeks, put it aside in a separate account. After the second paycheck, you're going to have that other half again. Make that payment in that time. If you do this every 2 weeks, you know how you get 26 pay periods a year? You end up saving 26 times, which is 13 payments.
Oh, wow.
You end up making 1 extra principal payment a year. Now, when the interest rates were lower, it cut the term 6 to 8 years. I think now it's about 3 to 4 years.
Okay.
To cut that off. But it's a great way to help get that mortgage paid off sooner because, hey, what if you refinance? The lower the mortgage, when you refinance, the lower your payment's going to be. What if you plan to sell? The more you pay off, the more equity you're going to have in the home, which is more proceeds that you're going to have to use for something else.
So how much more would you suggest to pay over what your mortgage payment is?
It's
to make a
different for
difference?
everybody.
Okay.
Every little bit helps.
Even like a $10 more
Yeah.
could help,
Yep.
right?
Yeah. The easiest thing, if budget is a concern, just round it up to the next $100.
Oh, yeah.
So let's say your payment's $1,460. Make $1,500 a month.
That make a huge
Yeah.
impact.
It's just every little bit's going to help you save over the life of the loan. If you can work into your budget, let's say your payment's $1,450 and you can afford $1,600. Do $1,600. Just whatever you can put towards it that's comfortable for your budget.
And something else just got to my head. So like if you have a MIP on your loan,
Yep.
What is the time frame again that you need to call your lender? Because they're not going to just automatically take that off. Like,
Correct.
isn't there a time limit when you can call and say, hey, I'm this many years, I've got this much equity, take this off?
So it'll in most cases it usually falls off depending on how much you have down. Let's say I'm going to work with just the minimum down. So let's say 3 to 5% on a conventional loan.
Okay.
I think it falls off after about 8 or 9 years.
Okay.
Well, obviously we want to get rid of that a lot sooner. So at this time, the private mortgage insurance companies have a rule of a minimum of 2 years unless you've made a huge principal reduction. Then you can inquire about it sooner. But the time frame is usually 2 years, and then you call your servicer and you ask them, what do we need to do? I'd like to have the PMI removed off my payment. And everybody's different. We have a market analysis done, and if that market analysis fits the numbers that are needed, then that PMI can be removed. If you have an FHA loan, refinancing is the only way to get out of that.
Yeah.
Unless you put 10% down on an FHA loan, then it will fall off. I think it's 11 years.
Okay.
But we would want to refinance well before that.
Yeah, for sure. Okay, cool. That makes sense.
But if rates go down, let's say they go down enough and you haven't been in the home for 2 years quite yet, but they've gone down enough and your equity has gone up enough that refinancing would remove that PMI. So that's something to consider as well.
Because that's a lot. That's a lot of money. Per month.
It can be. It can be. Some are as minimal as $30 a month. Some, depending on credit and loan size, could be several $100s a month.
Right. So that can be a huge impact.
Yep,
It could be the difference between you eating ramen noodles and sushi.
It smells so good though. Can we put them together?
Why not? My daughter loves ramen noodles and I love sushi, so there you go. Actually, I just had Samurai Garden last night for dinner, and it was actually really good. Yeah, it's good. Good stuff.
Oh,
we're talking about food here.
I know.
Hey, let's see. Dana's watching. Dana's in the house. What's up? This has been really good as always. It feels like our hour just flies by.
It does.
I think we could
Super
just
fast.
talk like all day long.
Yep.
About this stuff.
It is. Yep, for sure. Mortgages are not sexy. I think it's more fun being on the realtor side, but I'm a numbers nerd. So
and I'm not, and that's why you do what you do, and I do what I do.
Yep. You have to deal more with personalities and people, and my numbers are the numbers. And that's what it is. Here's what we can work with. I'm going to push that gray area as much as I can.
Yes.
But this is your income. This is your expenses. Here's what our options are.
Yes.
Yeah. But it can be fun. It doesn't have to be stuffy.
Especially with Dede.
Yeah. So I have this sitting on my desk, and people always this is the first thing they always notice. Do you see this? It says, I speak fluent sarcasm.
I love it.
And I have things around my office that also reference that. I have a Judge Judy over there.
Oh, I gotta show this. Hold on.
So my office is really a good indicator of my personality.
That's hilarious.
So mortgages don't have to be boring.
Yeah. No, they do not, especially with Dede. And that's what I love about you. She'll tell it straight.
I will.
You'll be completely straight. And that's what I love. And not everybody loves that, but it is what it is. And I'd rather deal with the reality than be fluffy.
Exactly. So. Yeah. I'm don't want to give people false hope.
Yeah.
I want to get you no home. I believe in home. Oh, sorry. I believe in home ownership. I absolutely think it's a great place for people
Oh yeah.
to get to. It's just having that little bit of control over your life.
Yes.
And not somebody else.
It's something that's yours.
It's yours. Yep.
And it's your investment.
It's your safety.
Yeah.
And it's your investment. And it can be a savings or a retirement, depending on how you manage it.
Yeah. Yeah.
So I want to put you in a home.
Yes.
We want to get you into a home. So we're going to tell you the real story.
The real.
Yep. The real.
The real.
It might not always be fun. I've had a couple not fun conversations in the last few months.
Me too.
If we want to do this, this is what we have to do. We don't have any other option. We've exhausted everything at this point.
Yep.
And those aren't fun conversations to have. But again, I could say, you know what? I'm sorry. We've done everything. There's nothing else we can do. No. Who does that?
No. And that's the thing. You always and that's what I always tell people when I work for you. I'm like, she's out of the box thinker. Like you're always trying to think creative ways to make it work because that's your goal is to get them into a house.
Yeah.
So
I don't like to say no.
Yeah.
I don't like to be told no.
I don't either.
I'm like, what? What'd you say?
Did you say no?
How dare you? Exactly. Don't you know who I am? I'm
kind of a big deal.
I'm kidding, by the way. But no doesn't work in my vocabulary. So.
We don't take no for an answer.
No.
And that's what you want. That's who you want on your side. It's someone that does
Exactly.
not take no for an answer.
Exactly.
So,
if I can find a way to make it work, I'm going to do that. If we need to do work to make it work, I'm going to tell you that.
Yes. And you're going to have to do the work.
And sometimes it's not fun.
No.
It's not going to be.
No.
It's not going to be a fast fun.
But it will
be fun.
But it's worth it.
We will get you there.
Yes.
And that's when the fun happens.
Yes. And just because I've been there. I see my microphone too. I've been there. Like I've been in a place bad financial. I'm just going to throw it out there. I had to do a short sale on my property this before I was in real estate, but I did the steps that it took to get out of that. And honestly, it only took a few years. And I bought, our other home. And that time I was like, okay, we're going to be smart about this. We're not going to overbuy. We're going to make sure we're within our means. And I tell that to clients all the time. Like I've actually stopped clients from buying a home that I could see you're not going to be able to afford this, or you're going to be hating this house in like 6 months because you can't afford to do anything else. You're living for your house. So I always tell my clients that just because I've lived it, it wasn't fun. But there you get out of it, right? Eventually. So you just sure do work in it. So,
and one last thing, I'm going to close this out. We live paycheck to paycheck, but we don't qualify. Paycheck to paycheck. So just keep that in mind. When we're working with your numbers, we're not making you house poor.
No.
Whereas the rent might be a challenge in leaving not much left at the end of the month. We're going to put you into house payment that you do have stuff left at the end of the month. So that can be another topic for another time. But just remember, we live paycheck to paycheck. We don't qualify paycheck to paycheck.
We'll have you on again. We should talk about VA loans too, because I know that you're very knowledgeable on that aspect. And of course, my dad was in the Navy, and so we'll do that. We'll do that. So stay tuned for that.
All right.
Thank you again, Dee, for coming on. Again, we went over, which is great because we have so much to talk about. I have so many more questions, but we'll save that for next time. Well, thanks for watching, everybody.
Okay.
Have a great weekend. Call Dee Guild Mortgage. You're located on Central Avenue and 32nd, or just give her a call.
Okay.
All right, we'll see you later. It's in the stream. Bye.